think it is all over, by the way, this slump. Don't agree with our friend Quentin. But, Don, you know, everybody always says, oh, the cheap dollar is causing exports. First of all, the dollar has been rising in recent months, and business orders...
Not in that quarter, Larry.
I understand, but follow me through. That is a view that, you know, I know. What about American competitiveness? What about American productivity? Why don't we give the American worker any credit? In other words, this idea that cheap money, Don, is the only way for us to sell overseas bothers me. And I want you to respond to Quentin Hardy.
Well, I agree with you. You know, nobody's going to buy something from the United States just because it's 5% or 10% cheaper than you can get it from someplace else. They're going to buy it from the United States because it's better. You know, and that's all there is to it. You know, that's why we've had an export boom, you know, building in this country for a long time. Now, it's been overshadowed by the fact that we've been importing a great deal, too. But we're such a great, wealthy nation, we have to import more than we export in order to give our poorer trading counterparties the dollars to buy our exports with.
One of Laffer's other points that was really interesting to me, the narrowest money supply, M1, over the last 3 months is growing at 10% at an annual rate. The monetary base is also growing at 10%. Now, I'm not going to use that as an inflation thing. Art Laffer said it shows the demand for money is picking up just as the dollar is rising, just as the economy is getting stronger, and just as I think we are headed into a gale force stock market boom. So the money, and Vince mentioned the pickup in commercial paper, C&I loans are still positive, Don. Doesn't this sort of really undercut this credit collapse argument, which I think is driving through the rear view mirror, not the front view mirror?
Absolutely. This idea that we've had a credit collapse is certainly true if your benchmark for the amount of credit that ought to be out there in the world is the infinite amount of credit that was coming out during the peak of the subprime craziness. So that's like saying that you don't think we're ever going to be in a bull market in stocks until the NASDAQ hits 5,000 again. That is too high a bar. We have, in most ways, a perfectly reasonable credit situation right now. It's just that a lot of people are wringing their hands because the way they got used to making a lot of money 2 or 3 years ago isn't available to them anymore. So they have to go back to the good old-fashioned blocking and tackling of lending money to people who can actually pay it back, heaven forfend. And so we're not in any kind of...
But under pretty favorable interest rate conditions. Don, I want to get your investment strategy. You know, you go down the list. Banks did great today. Merrill, Lehman, Morgan, Goldman all did good. Citibank did good. Bank of America, MBIA did very well today. Insurers did well. But also, Don, retailers do well as oil stays low. That solves consumers. Industrial machinery, not surprisingly, also did well. Don, give us a quick thinking on your investment strategy. Can this bull market move continue?
Oh, it most certainly can. Stocks are ridiculously undervalued. The pessimism is so thick, they've just got to go up, and they will. I do urge caution in the financial sector. It's a great recovery play, a great distress play. But in the end, don't forget, the benchmark that these companies have is the subprime craziness of 2 years ago. They do not have an alternate business plan. They're going to do fine. They're not going to zero, but they're not the growth story today that they were coming out of the S&L crisis. I think the growth, if you want to find a beaten-up sector that you can play reliably for the intermediate term, you ought to be looking at basic materials stocks. Those have been punished mercilessly because they've fallen as the oil price has fallen. Oil's been in a bubble. Other commodities have not really. So just because the oil bubble has popped doesn't mean that metals, fertilizers, papers, foods, all the other commodities ought to pop along with it. So you got to get into those stocks that have been just destroyed for no reason.
What do you think of that, Vince Farrell? That's a very broad-based, positive investment strategy. What do you think of that?
I don't go against Don Luskin ever. He's a pretty smart guy. But let me...
Last time I was on this show, Larry, Don Luskin on his blog the next day insulted me and denigrated me in dishonest ways. But I'm still going to agree with him for the most part on what he says.
So Mr. Luskin's the winner. Mr. Luskin's the winner.
No, he's dishonest,
actually. Oh, goodness gracious. Okay, Quentin, I'll put up a blog posting later today linking to my previous blog posting and let the viewers decide who was honest.
All right, gentlemen, I appreciate it.
I sent you an email, Don. You didn't read it.
All right, hang on.
You never sent it.
We'll work that all out.
That's not true.
We welcome all the contributions.